Morning guys, so we've really moved on the QDB risk calc. We were extremely bullish and now we've gone to fairly bullish. So as you can see, we've got quite a bit of red on the screen now. So what's happened is that the herd are given up on their bearish bets, which is well overdue. They should have given up a long time ago, but they kept adding, and it looks like they're just slowing down now. But there are still a lot of bears left on Twitter, a ton of bears still, so they might have to get squeezed out. It's quite frustrating, you know. It's just because we want things to align to like some kind of normality, but if there's going to be a massive majority who's still going to want to sell, it might come up to punish them, and it's going to continue, and it's going to be an unhealthy skew until they've given up, basically. So we're well over normal parameters at minus 26. There's 26 people selling indices versus the one person buying, so it's a load of bears, but we were minus 30. Alright, and it's quite frustrating to see. You'd think perhaps they might have given up and then, you know, left the casino and then, you know, did something else, but they're holding on, and they might add today. There won't be any more bulletin until the 27th, so we'll just have to wait and see what happens. Remember to get a copy of the trading station, and then you can see the SSI snapshots, and these will really help a lot. You know, in lieu of no bulletin tomorrow, you can use this data here and you can get an idea what the indices are doing. So for example, German 30 was sticking out quite a lot out here, but we're seeing a reduction in positions. Okay, so you can use this in lieu of me not being around until the 27th. So it's going to be really quiet next week anyway for trading, so probably not an ideal time to trade. Okay for scalps, I suppose. So we really dumped on the indices and risky assets. VIX pumped, we were up to 7%, coming down slightly. It's a plus 6.9. Dollars rising, which would be normal because, you know, we're going risk off with a higher VIX. That dollar should be appreciated. And don't forget we've got a Dixie set up in Discord as well. It's a dollar long trade idea. Thursday, so they've really shorted these at the top four, but they have started to reduce their positions on France 40, DAX and US 30. Okay, and that's how the changes from last week. We did really well yesterday. We did really well. We had like a £13 profit on our account, which is really nice. And the key thing is to note is that we're not looking to make lots of profits. We're just testing the timings because he's come out every 2 hours. And we're testing the risk management part because at the moment we've got a 1R to every single trade. So the SL is equidistant to the TP. Now next year, or maybe even next week, is that we can start to look to increase the TP by 1 pip. Then perhaps like the next day we can increase by another pip, and then what we're going to do, we're going to increase our risk multiple, and inevitably we'll get to like a sweet spot where we're making quite nice profits, and that's what we'll do. So you will need a hedge account, obviously, because you can see we've got buy and sell trades. But we should veer more into buy or sell, depending on sentiment. But the reason why we're having bi-directional trades is that we might come up to the stop loss cluster, not gold, but anything, doesn't really matter. We can come up to the stop loss cluster, but we don't know what they're going to do, whether or not they're going to move their stop higher or they're going to get stopped out. If they get stopped out, we'll reverse. If they move their stops higher, we'll continue higher. This is why we're doing bi-directional trades, and inevitably they will get stopped out, and then whatever way that we're leaning towards will profit. So the robot's leaning towards some dollar strength because we've got more buys than sells. Okay, so that's what it does. It hedges and then it leans towards one side, and then that's what the robot does. Interest in gold. So this is how snapshots are really useful, really cool. Remember, we're on this side of the daily diagonal on gold. Stops are up here, like I just showed you. So probably up to stop loss cluster, down. So we should be bearish because we've got a bearish diagonal break, right? So up to stop loss cluster, ruin those guys weak, and then we can fall potentially. the thing is, they have sold it, so by selling it, we should come up to their stops. So we know 2040-ish is the stop loss cluster, so that's what you do, right? They're selling it. Where are they going to put their stops? Well, they could put it here. They could put it here. Perhaps that's a bit too wide for them, maybe. Maybe that's where a lot of the majority of the stops are going to be at 2050. It's obvious why they'd have it there, but perhaps they don't want to have a large stop loss. And that's why they've got it here, potentially. They could have also entered around about there. And that would be quite a wide stop by there. So up to the SLC, I think, on gold. And US indices are quite frustrating because yeah, they're really selling it, and they're selling it very, very heavily. So we had to buy here. So we basically on that candle there. Oh God, I'll just do one more screenshot of this. This is unbelievable. This is what I was saying. There's so many bears, and they're going to ruin. They're going to screw themselves. Going to shoot themselves in the foot. So probably up to all-time high, I guess, just because of this. Yeah, it's horrible. It's just absolutely full-on bullish candles. 2, 3, 4, 5, 6, 7, 8, 9 bullish candles without a breath. Just pure bullish price action for the last 9 hours, and they're selling it. Okay, so we've got a box here, so it's a support box, and yeah, it's going to be annoying. This is also doing something similar. Well, they had gone long, so there's the sell. So, yeah, we shouldn't really be coming up higher because they're going long. So this is likely a phony candle, this one. Yeah, it's a bit of a strange one. If they sell it and we get the crossover, then we're about to map a box below, but they haven't crossed over here. So the last crossover was up here, so this is going to be a resistance. Oh, yeah, might be doing that, might be testing that resistance, like a supply test. Yeah, so that's interesting. So we shouldn't be coming up because we didn't get the crossover here. All right, so probably a bit of resistance up here. It might be following the US 500 as well. DAX, let's have a look at DAX, and so this is fine, we should be falling, so they've gone long here, so we can create a box there. So S&P is very frustrating. There's lots of people on Twitter who are bearish, but they're recommending to their followers to sell, and then of course then they'll tell their friends, and then they will tell their friends this is a great shorting opportunity on the US 500, get involved. And of course that influx of dumb money is causing this shift. So I'm going to do a screenshot of this, I'm going to share it on Discord, and I wish you a Merry Christmas and a Happy New Year. But I'll be back next week anyway. I'll be back on the 27th, so be careful, get a copy of the trading station, and especially the SSI snapshots, and get a copy of the SSI indicator. And you know, you can see how you can make buy opportunities or sell opportunities using the crossover logic. Okay, and I've lost my mouse. There it is, it's up here. And that's it. So trade safely, and I wish you a great day. Trade safely tomorrow because we've got the PCE data from the United States, so we might be going up to pump up to that data, and then we're going to sell off tomorrow. So we'll have to wait and see. Trade safely. I'll speak to you guys soon.